Right. So, I mean, in the ETF space, Ether has got much more in common with Bitcoin than it has with any of the other coins or tokens. And the reason for that is there are regulated futures listed on Ether, and there are regulated futures listed on Bitcoin. So there's kind of been this ongoing discussion about, what's better. Is a spot better than a futures-based ETF? The reality is I'm not sure anybody really has the answer to that. But what I do know is that bringing an ETF to market that uses the financial infrastructure, this financial regulation and infrastructure that already exists, is a lot easier than trying to work around it. So, trying to use coins that are traded on unregulated exchanges, possibly on market made by unregulated market makers, etc., is always going to be a much bigger lift than using the infrastructure that exists. So our approach has been to use rules that were adopted around ETFs, and to use and to trade products in the underlying that are already regulated by the SEC or the CFTC. Right. And that's where Ether differs. So Ether futures trading on the CME are liquid. The open interest in them has been growing. So we look at this and we say, well, we're willing to have that argument and say, what's really the difference here between these and Bitcoin?